The global economy is holding its breath as US President Donald Trump and China's Xi Jinping met for the first time in 6 years. A high-stakes encounter at the APEC Summit in South Korea that could reshape global trade flows. Together, the US and China account for nearly 43% of global GDP and almost half of global manufacturing output. Their trade relationship, worth around $585 billion in 2024 alone, sits at the heart of global supply chains. That's why any truce or escalation between the world's two largest economies doesn't just affect Washington and Beijing. It ripples through every market, from Latin America to Africa. Economists warn that a full-blown trade war could cut global GDP by nearly 7%, according to the World Trade Organization. Beijing recently threatened new export curbs on rare earth minerals, vital for everything from smartphones to fighter jets, a move that could paralyze global manufacturing. Washington, in turn, floated a 100% tariff on Chinese goods, raising fears of an outright trade freeze. Experts say both threats are designed more for leverage than enforcement. Henry Gao, an international trade scholar in Singapore, notes these measures are tools of pressure, not policy, a warning shot to push each side back to the negotiating table. US Treasury Secretary Scott Bessent has hinted the two sides could agree to pause tariffs and export restrictions, a temporary cooling off after months of tit-for-tat escalations. The International Monetary Fund recently raised its global growth forecast for 2025 to 3.22%, reflecting optimism after Trump's earlier tariff threats were rolled back. But analysts say that optimism could vanish if the talks collapse. The US-China relationship is the world's most important bilateral relationship, says Hai-Wai Tang of the Asia Global Institute in Hong Kong. De-escalation helps not just the two giants, but every smaller economy linked to them through trade. Still, few expect lasting peace. Analysts like Jacob Gunter from the Mercator Institute in Berlin say the two economies have fundamentally diverging models. China's state-led, export-heavy structure versus America's open market capitalism. That makes a comprehensive deal hard to imagine. As Gunter puts it, no agreement can satisfy both sides' core interests without undercutting the other. For now, the world hopes Thursday's handshake in Gyeongju brings calm, even if only temporary, in a trade rivalry that defines the 21st century economy.